Real estate is awesome, especially when it provides us monthly cash flow, long-term equity growth, all kinds of tax benefits, and more. And yet picking a market is important. Not every market is the same, as we've been talking about. So let me introduce you to a couple of gentlemen that just happen to be in two of the greatest cash flow markets in the United States. Let's say hi to Terry and Matthew from MidSouth Homebuyers. Hey, guys.
Hey, Robert. Thanks for having us, man.
Thank you, Robert.
Great to have you guys back on the program. Let's attack the elephant in the room. People are sick and tired of hearing the Mid-South ads on the real estate guys for nearly 2 decades. And the reason we do that is because you guys have a really strong operation, provide great properties. We'll talk about all that before we're done. But I think let's start with the markets because, Terry, it's not like you said, I'm going to strategically pick a great cash flow market. You were born in Memphis, Tennessee, so you've been the beneficiary of all the great things that Memphis offers for a long time. But take us through why you like Memphis and why investors should consider it.
Sure, absolutely. So I was very blessed to be born in the best cash flowing area of the country. And, I've got family in Little Rock. So cut my teeth rehabbing houses, turning them into rental houses. And then one of my buddies started wanting to buy houses from me. And he was an investor in his own right. And I asked him why he would buy houses from me instead of buying them and fixing them up himself. And he said, because I don't have enough time and it makes sense for me to buy them turnkey from you. So the business was all of a sudden in an instant built, and that was almost 25 years ago. And fortunately, I got family in Little Rock, so we went to Little Rock about 8 years ago. Very similar to Memphis as far as cash flow goes. And so, a lot of luck there, Robert.
Well, and I think that's a great point. The first thing to point out is you ended up in 2 excellent cash flow markets. But you came in through the door of how do I add value? I can fix up these dilapidated, ugly duckling houses, and I've seen many of those with you over the years, and then they turn into absolutely fully renovated, beautiful houses that perform better. And to your friend's point, not everyone wants to take the time, energy, and effort to do that. And I think people are also concerned that they might overspend or make mistakes or miss something. So when I can come in and get the fat cow, right? The property's already been made beautiful, new roof, new kitchen cabinets, new heating and AC, all the things that they have, then I can walk right in with a tenant in place. Now, that's not for everybody. Some folks listening are like, no, I want to be a Terry. I want to go and find the houses and find the neighborhoods and do the work. Nothing wrong with that. You did that. But 25 years and thousands of houses later, I think it's a proven model. So you kind of fell into Memphis naturally, and then Little Rock's a great story because once you guys had a bunch of success, you took your existing crew, not hire a new crew, the crew that had been working so hard and so well in Memphis, and you sent them, or most of them, up to Little Rock, and they started that endeavor, and it turns out that's been a great market as well.
Absolutely. Yes. So about 8 or 9 years ago, we took 20 families and relocated them to Little Rock. We jumped in with both feet, and Little Rock is a terrific market. It's the capital of Arkansas, lots of good government jobs, lots of good healthcare jobs there. It's really been a great go. So we're pleased to be there. Yeah, as you mentioned, some folks are going to want to buy it, fix it up themselves. In the beginning, we stubbed our toes. I stubbed my toes a lot. And for the folks who don't have time for the learning curve, turnkey is a good option. And so we're, very fortunate to have, been able to be on your show and advertise and work with your listeners for many years, and just really, really grateful for the relationship.
Now, Matthew, I want to ask you a question about the markets because you're relatively new in the role of helping investors, but you've been with the company a long time. Anyone who has a Mid-South house knows you from the property management side of the business because, Terry, of course, your company does both those things. Gets the houses for folks, does all the work, gets the tenants in, and then keeps them in the property management company. But, Matthew, I would imagine a lot of people who reach out are like, well, which one's better? Where should I invest? Should I invest in Memphis or Little Rock? So from the investor counselor point of view, what are the trade-offs?
Yeah, sure. So the trade-offs, of course, we've been in Memphis the longest. Terry was born here, as you mentioned, been running this almost 25 years now. So the experience we have in this market is unrivaled. And just as far as a city, I mean, you zoom way out, a lot of similarities, of course.
Yeah.
And that's a big reason why we went to Little Rock, is because there are so many similarities. And one thing I want to mention, by the way, is these are great places just to live. I mean, sometimes, I wish I was closer to the beach. Sometimes I wish I was closer to the mountains. But when I'm filling up my gas tank, I love it, and when I buy a gallon of milk, I'm loving it, and so the grass is always greener, but these are both markets that are 10 to 15% below the national average when it comes to cost of living. And yet there are so many, an abundance, I would say, of strong, stable jobs in these markets. And so you'll notice just in terms of the products that we offer at MidSouth, there's a little bit of a difference just in terms of you will find more rehab properties in Memphis where we're doing a full renovation to the junker homes, like you mentioned. We like to buy the junkers because we want to make everything brand new for our investors. So it's a new roof, it's a new water heater, it's a new HVAC system, and like literally down to the studs, we're renovating these. And we have started new construction in Memphis. We have some available new construction there that we're doing. Over in Little Rock, you will notice it's a lot more new construction heavy. It probably leans more like 80-20 in favor of new construction versus rehabs in Little Rock. So if you're just looking at essentially the available inventory there, if you're more inclined to new construction, there are more opportunities out there in Little Rock. Little Rock's about 1/5 the size of Memphis is another difference. I think it's a fantastic small city in which to live. Even though it's smaller, you still have an airport right there in the city. You still have lots of jobs. As Terry mentioned, it's the capital of the state and also the largest city in that state. And so people come from all around to visit and enjoy Little Rock. So I would say those are the main trade-offs that you're sort of looking at.
Well, some really good points there. You mentioned what really boils down to quality of life, less expensive to live, a nice lifestyle. Someone who has an average job can live pretty well in both these places. And that's true for tenants, just like it would be someone who wanted to go and buy a house there. And I think when we're looking at the guests we serve, the tenants in our properties, we want them to enjoy where they live. I mean, they're going to pick a property because it's close to work and they like the schools, whatever that might be. But at the end of the day, we all know the most expensive parts of buy and hold real estate are turnover and vacancy. So the longer they stay, the better. One of the things that you guys have done such a good job is keeping tenants longer. We'll talk about property management before we're done. But the other part is, the whole theme of the show is that markets matter. And they matter in different ways. If you take what you guys are doing in Little Rock, there's more need for new housing. So you have more new housing. And there's obviously trade-offs. I like to buy new because, home warranties, nothing's going to wear out, etc. I like to buy in established neighborhoods because they're proven, the trees are mature, right? All those things. So it's not like one's better than the other, but it is a consideration. And if I'm in a market that's growing and there's a stress on the number of houses, then new properties can certainly be worth taking a look at. So an investor needs to decide not just the market itself, but kind of where within the market they want to be. And let's talk about that, because price-wise, people are, I would say, pleasantly surprised when they hear the prices of the properties that you guys sell. But having spent time in Memphis, I mean, there are, $80,000 properties that you probably don't want to spend too much time with. And there are multi-million-dollar properties. So talk about not only the price range that you work in, but who that demographic is that you serve.
Yes. So as far as buying homes from us right now, homes start around $100,000. And if you go all the way up into new construction, those can be as much as $250,000, but we're well represented all within that price range. And speaking of just the rehabs for a moment, you'll notice, Robert, if you're on our website, whether it's a $100,000 rehab or a $200,000 rehab, it's the same level of renovation. So we don't do like an an A-class renovation for one and a D-class for the other. It's going to be what I mentioned, where it's going to be new everything wherever that property is. And so our residents, whether they are in a property that rents for $850 a month or they're one that rents for $1450 a month, they still get the same level of quality, the same level of finishes in the home. It's a brand new experience. Of course, they get the same service from our team, which is really where the rubber meets the road to a large degree. And you talked about where this falls within the market. It falls within the average rent that the average person can afford. And what does average mean? Average means the most, so you have the most eyeballs on your home. You have the most people who have access and can afford your homes. And so I think that's a great place to be, whatever market you're in, to be in a position where you appeal to the average because it's the most. And that's why our properties rent quickly. And that's why our residents stay a long time, is because they can afford to rent them and they can afford to maintain and sustain their tenancies there.
Yeah, good stuff. Terry, I'd like to peel back the curtain a little bit and explain why this makes sense, not just from the investor's point of view, but from your point of view as someone who owns a property management company and has to deal with the tenants. Just like for the investor, less turnover is better. That's true for property management as well. If you do a really good job on the renovation, there's going to be less hassle, less maintenance, less calls to have people come out and look at stuff. One of my favorite quotes is from Brian Tracy, and he says, "The pain of low quality always outlasts the pleasure of low price." When you don't spend as much on the renovation, when you cut corners, when you use the cheaper one, that's going to come back and bite you if you're planning to own the property long term. So some builders, they value engineer and they take some shortcuts because once they sell to you, they're done. You guys aren't in a position to do that because once you sell to somebody, they can have anyone they want manage it, but the vast majority are going to keep it in your property management inventory. Can you speak to that?
Sure, absolutely. So, we start, like Matthew said, with a gut rehab. And the reason we like the properties that are totally trashed is because you can afford to make everything new, right? And so you got to put more money into it, and profit margins might be a little bit slimmer, but on the long term, like you said, they're so much easier to manage, and that makes it easier for us. That makes the returns better for the investor. And so the phone doesn't ring here as much for, oh, hey, my water heater's broken, or my HVAC is out, or my roof is leaking. And so that also means that the resident is going to be a lot happier and they're going to renew their lease, which is the name of the game. And so, it's spring here now. So what happens in the spring if you own a property management company? The phone rings more because of HVAC. People are turning on their air conditioners. And I'm happy to say that even though it rings a little bit more here, it's not normal because all of our stuff is new and it's maintained. It makes sense in the long run for the investor, and it makes sense for us for the property management company.
Now, before we're done, we're going to share with you how you can see some of these properties because the prices are astounding, right? You can buy a complete home, all of the bedrooms and bathrooms for $130,000, $140,000, $150,000, a little more if it's new, a little less depending on, some of the smaller homes and things. But for most people in the country, and I know you get buyers from all over the world, most people are pleasantly surprised at the quality. But that does feed into one of the big attractions to the market is it's still affordable. And yet there's a tenant base that no matter how inexpensive the houses are, they get up every day, they work hard, they have a good job, but they aren't able to save up the 20 or 25% it takes to buy a home. And they may not vision themselves as being in Little Rock or Memphis for the rest of their lives, so they're hesitant to pull the trigger for that reason. But I know you have tenants that have been in houses 8, 10, 12, 15 years. So the property management is important. And this is one of the areas that I think as people are looking at market selection, we always talk about the personal investment philosophy, who you are as an investor, leads into the market or markets that make sense for you. Once you have that figured out, you find a great team that can help. And once you have a team, then you look at a property. Too many people start with the property. But when we're looking at these markets, one of the strongest things to consider is how robust property management is, because you guys have been doing it forever. Anyone's listened to the show knows that when my son was 18 and wanted to buy his very first rental property, I said, well, I know right where we're going. And we flew out and we hung out with you. Turns out that my son, like you, Terry's kind of a car guy, so he really enjoyed the trip. And then we went and looked, and we saw the before house. And it's kind of hard to look at some of those before houses that you guys do, because they are in bad shape. And then we went to a couple that were in various stages of progress, how far along they were. And then, of course, we ended the tour with a brand new, fully renovated house, and it's night and day. And I remember on the way back to the airport, Ethan's like, so that last house we saw, did it really look as bad as the first house? I said, yeah, it did. Few months before they started. So there is a transformation that happens, and you put something in your property management inventory. Now you have to manage it. And so talk about that part of the business. How transient is it? Who are your clients? And property management is generally not a lot of fun. Obviously, higher quality houses make it a little easier. But Matthew, you were in this part of the business for a long time. And give us the skinny on what it's like to have to deal with so many tenants.
Yeah, it's fun. The folks on the property management team, we would say we get to deal with our tenants. we love it. When I started at the front leasing desk with Terry over 14 years ago, and I loved that you never knew who was going to walk through the door next. I loved that every day in property management it's a new day, and it's different than what yesterday looked like. There's plenty of surprises that you could see as far as that goes, that made it fun for crazy people like me who just enjoy interacting with people from all walks of life. But our residents, are just humans and people like people everywhere. We tend to take things for granted, all of us. One thing that we take for granted here in Memphis and Little Rock is that we can afford to rent an entire house, as you mentioned, and so, yeah, costs are going up for us, just like costs are going up, for everyone across the country. But, what we can afford is not just a studio apartment, with the income that we're making here. It's a whole entire house with a front yard and with a backyard. There's a pride of ownership, if you will, even though we're working with renters. Like you mentioned, a lot of folks just simply choose to rent. And why wouldn't they? Because we really do take such a high level of care, of our residents, that I think the service there is just something that a lot of people are just going to choose. You pay for that a little bit in, rent increases that do happen over time. But the reality is that costs go up, whether you're owning or whether you're renting. And so some folks are going to choose that. Some folks, as you mentioned, it is a bit of a generational thing where they just never considered home ownership. Some of us may have a perspective that that's not the way they should think, but that's the way they think, and people are entitled to think how they think. And so we're here to provide them the highest quality of life that we can, for what we're doing here. And for the large part, not a lot of transiency when it comes to Memphis and Little Rock renters. We have well over 1,000 residents who have been with us for more than 5 years.
Wow.
And so that's something that we're really proud of. That's something that really makes things easier on us than they could otherwise be. I take for granted, my job in that way. But yeah, it would be a lot more stress if we had higher turnover like a lot of our competitors do. And so with residents staying 5 to 10 years, that really helps us keep our overhead low on the leasing side. On the resident support side, we stay well staffed because we do want to spend the time that we need to spend with our residents, but it's a much smaller staff than it would otherwise be if we had industry average turnover.
And for the investor, this is really durability of income. So just a quick example. If I'm a studio apartment dweller, I'm probably only staying there as long as I have to before I can move into a 1-bedroom or find a roommate, move into a 2-bedroom, or someday be in a house. But when the first-time renter, right, can afford a house, there's less reason for them to move. And so durability of income is how strong and consistent is that income stream. When turnover is low, durability is higher. And as you're thinking about markets to invest in, that is a big distinction. We are talking about selecting a market, and this week's focus on cash flow. Matthew and Terry have been working in Memphis, Tennessee, and Little Rock, Arkansas for many, many years. These are two markets that have historically had great cash flow. And that really helps when you're trying to figure out where to invest. It's not the only thing. One of the other things that I like to look at, gentlemen, I think this is a great way to eliminate about half of the markets people are considering, and that is tenant-landlord law. In some places, the local law and the local environment favors the tenant. So if there's to be any kind of an issue or problem, the courts and the police and the sheriff are all going to side with the tenant. In other places, it's exact opposite. They're more landlord friendly. So let's talk about your two markets, Memphis and Little Rock, and kind of where they sit on that spectrum, tenant or landlord friendly.
Absolutely. Well, fortunately, Tennessee and Arkansas are both very landlord friendly. Our residents know that, if they can't pay, they can't stay. Now, we work with folks regularly. Our resident support and solutions team, they are empathetic and they spend lots of time. We're very staffed up. We often are helping folks look for jobs or, anything that we can do to help them when they fall on hard times. But when we need to be able to pull the trigger and get them out of a property, we're very fortunate that the law is on our side.
Awesome. And of course, that's just one of the considerations. But back to durability of income, if for some reason the tenant doesn't pay, you'd like to get them out as soon as possible. I remember hearing some time ago, and I don't know if this is still the case, but there was a time where Arkansas was the absolute most landlord-friendly state. Does that still feel that way?
That's what I hear. Yep. Yeah. I haven't heard anything. I haven't heard of any other state that is more landlord friendly than Arkansas.
Yeah. So again, just one of the considerations, but you check the boxes there. Now, before we talk about this really cool thing you guys are doing, I want to address something that maybe not everyone talks about, and that is because you guys over the years have figured out that folks outside of the U.S. are interested in cash flow properties and come up with a way to sell those properties. We have listeners in more than 190 countries. So we'll just spend a quick minute for anybody who's outside of the U.S. Talk about that. It's a different deal when you're trying to buy if you don't live in the U.S.
Sure, absolutely. So we work with lots of investors outside of the U.S., and we have non-recourse in-house financing that we offer our investors, whether they are in the U.S. or abroad. A lot of folks will take advantage of debt service coverage ratio loans nowadays, but folks overseas, lots of them do prefer to tap us for our in-house financing option where we work with one of our local banks. We do the financing for our investors and we take that paper to the local bank, and that is how we're able to provide that permanent financing. It's fixed for 12 years. The rate obviously fluctuates because we've got to pay whatever the bank is charging, but it's very popular. It worked well for a lot of folks.
Yeah, it's a great program, and not too many folks are able to offer this kind of a program. So if you are a Real Estate Guys listener in another country, glad you're here. This is certainly a place you would consider. And the other part is it's very hands-off. No real estate is completely hands-off. There's always something that you need to do, but this is as close as you can get where it's all fixed up and beautiful and tenanted when you get it. And then the property management is boots on the ground there to take care of everything you need. So I know you have folks who've never seen their properties, maybe even never set foot in the United States. We don't necessarily recommend you buy something sight unseen, but if I were to do it, it would be from you guys. This is exactly the loan program that my son used. I'll tell you, when I'm at conferences, I was at a conference a couple of weeks ago, and my son Ethan was there, and I always point him out because there's young folks in the audience, and he bought his first house at 18, his first rental property. And how do you buy a house at 18? You don't have tax returns, you don't qualify for a loan. Well, he used this exact program. So if you're a parent out there and you're thinking, man, I'd love to get my young adult off to a good start, and you're just assuming they need 2 or 3 years of tax returns before they can afford to qualify, that's not necessarily true. So before we're done, we'll tell you how you get in touch with these gentlemen and find that out. Now, as affordable as it's been and as carefree and durable as the rents have been in these markets, you guys just introduced something I'm super excited about, and that's your 555 program. Matthew, tell us about the 555.
Oh yeah, excited to do so. So what we're offering, it's called the 555. That's 5% management for 5 full years on new purchases. And you have the opportunity at a 5% interest rate on a 30-year loan. We have a program through Guaranteed Rate, one of our preferred lenders who has a buy down program that we've worked out with them, that qualified buyers can receive rates as low as actually 4.99%.
Well, 555 sounds better than 2 5s and a 4.9, but no, that's awesome.
What I was thinking.
So 5% property management. Now, property management isn't that expensive anyway. What you guys normally charge is perfectly fair, but why not offer a little bit of an incentive for folks? 5% for the first 5 years, and then the 5% interest or 4.9% interest if you're qualified. Is that also the first 5 years?
The interest rate is fixed for 30 years.
Oh, wow.
Yep,
amazing.
Absolutely. Yeah.
All right.
Well,
that's our little commercial in the middle of the interview. If you're interested in that, we'll tell you how you can reach out. So, guys, before we're out of here, I know you don't have a crystal ball, but last week on the show, we were talking about how expenses are up, and in the last several years, interest rates are up. This program of yours is going to help a little bit. But where do you see things going in your marketplace? And are people more excited? Are they hesitant with what's going on in the world? What's kind of the temperature of the market right now for you guys?
Sure. Well, a lot of the folks that we're working with now that are currently buying from us, they know that when interest rates go down, prices are going to go up. Right. And so they're locking in now, whether that's, using their typical Fannie Freddie or, paying cash or utilizing our in-house financing. Everybody knows that when interest rates go down, it makes cash flowing rental property go up. So folks are locking in now. Yeah.
And Matthew, do you see an increase from folks looking to get into the market now? What's happening? I think cash flow markets maybe perform a little different than growth of equity markets.
Yeah, I would say so. Just in general, it's difficult being a great investor. Our human psychology kind of lends toward us buying when things are at their hottest and selling when things are at their coolest.
Right.
But the people that I see that are most successful, it's just like over in the stock world. You look at the most successful stock investors, it's the people who dollar cost average into the index, 90% of the time. Those are the ones who win. And the investors I see with us that are winning, they just have a mindset of they're going to keep engaging. They're going to keep purchasing, and they're going to keep investing in good assets because, like Terry mentioned, you wait and you're not glad that you did. Our investors who bought with us 10 years ago, 100% of them are glad that they did. And, it just is that adage, that old adage in real estate, don't wait to buy real estate. Buy real estate and wait. I know you've said that many times on this show, but it's still no less true. And so, yes, there's always going to be uncertainties, just as there is now. That will always be true. It always has been true. And the returns are for those who take action. And we see a lot of folks who are taking action. I mean, with MidSouth, truly, there's never been a better time to buy than right now. So I'm excited for what we're able to offer, excited about the new inventory that's coming available, both on rehabs and new constructions. Really great homes that we're putting out right now. Couldn't be happier about the product.
Well, this is our second decade working together, and I can't remember you guys having a special before. So I think it is a great time to think about it. And there's one thing that I'd like to maybe end on, and that is that there's this theory, and I subscribe to it, that the hardest part of investment ownership in real estate is the first couple of years. The first couple of years is when the numbers are tight, when things are difficult, when you're barely getting the cash flow, sometimes feeding the property a little bit. And once time goes by, well, then naturally the amortization kicks in on the loan and you owe less against the property, paid for by the tenant. The increases come in the rent, modest perhaps, but all that makes ownership easier as time goes by. So this 555 program lets you address that in the first 5 years, which is super, super cool. And I'll just say this. I know people are like MidSouth. We hear about them every week. And in all these years, hundreds and hundreds and hundreds of listeners that have bought houses from you guys, we've never had a single complaint. Not a single person has said, oh, those guys ripped me off, or they're terrible, or those markets are. It's quite the opposite. In many ways, we talk about MidSouth Homebuyers being the gold standard of providers at the Real Estate Guys. So we really appreciate you guys today, all the things that you're doing. If you're interested in getting specifics about the properties, what the numbers look like, and all of that, Matthew's going to join us on Monday, March 23rd. If you're interested in that free webinar, all you have to do is send an email to memphishowcase@realestateguysradio.com. No matter when you're listening to this podcast, if you'd like to connect with the guys, just send an email to midsouth@realestateguysradio.com, midsouth@realestateguysradio.com, and we'll connect you. Terry, Matthew, it's been awesome having you guys in the program. Continued luck to you.
Thank you so much, Robert.
Thank you.
Thanks for watching today. Continue to tell your friends about the Real Estate Guys channel here on YouTube.